So we're here with Larry Goldberg, and we're going to talk about Elon's tweet where he said he wanted 25% voting control of Tesla moving forward, for him to work confidently in AI and robotics at Tesla. And we want to talk about how Tesla could do this. There's been some discussions in the community about buyback and other things. We want to look at that. We'll show you why the buyback isn't going to work. And Larry's going to present us with an idea that he has for how they can resolve it. So, hi, Larry.
Good morning, Brad.
So right now, Elon owns 13% of shares in Tesla. So he is able to vote those shares. And he also owns another 10% through stock options that are not exercised yet. And you can't vote those until they become shares. But when Elon exercises those stock options, he has to pay a lot of tax. And we estimate that to be around maybe 50%. So it'd be 40% federal. And then there's going to be a portion that might be in California and a portion in Texas. California's income tax rate is 13%, and Texas is 0. So it roughly 50%. So he's got 13 today in regular shares. And then after tax, these options give him another 5%. So that gets him to 18. Elon says he wants 25. People are talking about buyback. And Larry and I, we were talking about this before starting the video. And I've come around on buyback. Tesla needs a lot of cash for their plans. And what Larry is going to show us is in Investor Day, Tesla told us what they think their CapEx needs are, your capital expenditure needs are. Larry, what do we see in here?
So, Brad, at Investor Day, Tesla gave us a very long presentation on their plans for the future, both in energy and in auto and in bots. And so if you just look at the energy side of the business, their plans are to build 20 million annual vehicle production by the end of this era, by the end of the 2020s. They plan on a terawatt of annual energy storage production, and they intend to support that with expanded cell production, their services, and their charging network. They estimated a total investment of 150 to 175 billion, of which they've already invested 28 billion. Now, that doesn't include capital for the bot, but I consider that to be relatively minor. I don't think that runs in much more than $4 or $5 billion, and I have some numbers for that. But absent that, what they're saying is they need at least another 122 billion and possibly as much as $150 billion. And they intended to be funded by operating cash flow. Because obviously any additional raise of money, they will dilute Elon even further. But bottom line is they're looking to raise about $150 billion to be, cautious and to be conservative, about $150 billion between now and 2030, and the bulk of it earlier than in the early half of that decade, because they need the investment in order to build out the requirements. Is that clear? Is there any questions about that?
No, that's good. And you had a chart that I think you tweeted out possibly.
Yes,
where
I did.
You showed the timing of kind of where we are today and where you think it's going to be as far as when Gen 3 really kicks off. You have this for this chart at 2027. Maybe it's 2026, but
yeah,
go ahead,
it's very
Larry.
difficult. It's very difficult to time it exactly because you don't pay out the money all in advance and so on and so forth. I would say that this is very conservative. sorry, it's not as conservative as it should be. What it is a little later than it should be. But okay, the green is the profit, not the cash flow. It's the profit.
Mhm.
The red is the annual capital expenditure, and I'm trying to be reasonable. In other words, there's no way they can build out the kind of factories that they're going to need for 30 million cars next year.
Mhm.
So clearly it's going to be in the 26 period that the very large build outs begin, and they
Right.
will peak in 27.
Mhm.
And then, as they start production, capex will sort of leverage down. The battery factories, the auto factories, all the service depots, all the whatever
Yeah.
they need to invest in, that will start really tailing off quite sharply towards 2030, while the revenue picks up quite significantly.
Mhm.
So I'm just taking the presentation they gave us Investor Day, and I'm putting a scenario, which is, I think, a reasonable scenario
Mhm.
in front of us, which shows us that we're going to be using every every penny of cash we can lay our hands on, and then some. So we're going to run behind our cash flow, our cash needs by 2027. And by the way, that's assuming all goes well.
Yeah.
And the other thing I will say is, we tend to look at cash flows at the end of a quarter. We don't get visibility into the cash flows between the ends of quarters. And I
Mhm.
think that cash flows really bottom in the middle of the quarter. So there has to be, in a company doing, the kind of revenues that they're doing and where they're going to be getting to, they're going to need at least operating reserve of about $10 billion, $15 billion. So I don't see any cash available for buybacks until we get to the 2029, 2030 period. And that's if Elon doesn't come up with some new investment to be made.
Mhm.
So when
All
we're
right.
looking at the current level of growth, what I talked about in terms of the demands on cash during the quarter, that's the whole
Mhm.
working capital thing. Captive financing is, gaps. They have to actually sell leases, use their own cash for those leases before they package those leases and sell them on to the financial institutions. That means that they need some cash on hand for those, and that they package them up by the billion at about $1 billion. So that's $1 billion in and of itself. And what they call downside protection. Downside protection is that there's a lull in the market, they have to reduce prices, whatever it is, they're going to need cash. So that's the daily operations, and their growth is, their R&D expenditures and their capital expenditures, and that speaks to that ramp up in the next gen vehicle and the new factories and the energy factories and so on.
Mhm.
And then opportunistic, elective capital expenditures, captive financing, again, captive financing, where they decide to keep some of the money, acquisitions and debt reductions that I discussed. And then finally, number 4 is buyback dividends. And my point earlier was, there's no space between 1, 2, and 3 currently for any excess. If you look at the plan, the $128 billion plan, we've
Yeah.
got $25 billion right now.
Mhm.
And it's all of that money is going to be sucked out and then some.
Yep.
And our cash flow is not running that hot right now. So if I'm sitting here running the company, forget about Elon Musk. I'm looking at my plan. I'm looking at what I have to do. I'm looking at the cash. I would be very uncomfortable with less than $25 billion in the bank. Very
Right.
uncomfortable. I really come from the same school that Elon comes from, in the sense that I don't trust the market having the money for me when I need the money.
Yeah, exactly. You don't want to be dependent on that window of the being able to raise money in the capital markets, whether it's by issuing stock or issuing bonds. You don't want to be dependent on that if you don't have to be.
And that goes doubly for Tesla because of the negative press and the kind of penumbra around the company. So the last thing this company wants to do is have to go to the market. If the market becomes very frothy and interest rates drop to zero again, by all means, go to the market. But right now, I would not plan to fund some future plan, some clear future plan, by saying, "Oh, at this point we'll go to the market." That's it. So I don't think that a buyback that would that would support Elon's desire to have 25% of the company, to control 25% of the company. I don't think it's possible. Not while the company has this very ardent plan. Now,
and also, like, if they just give him more options, he's not going to be able to vote those until they vest. With any of this, he won't be able to vote until it vests.
yeah.
And with the options, he has to pay a lot of tax. He's got to pay tax on whatever shares they give him. So you had another idea, which I'm kind of hearing for the first time.
Well, so X has been abuzz with the idea of selling some of his other assets into Tesla, and other people have come up with the idea of combining some of his other assets, some of Elon's other assets, and issuing himself with stock. In general, that's not a great idea. Because people who buy Tesla for what it is, and they don't really want to have, a very mixed bag of assets. It's not popular. It's not a great investment thesis, and so
they want that exposure, and most people aren't going to get like boring tunnels or Neuralink, or why those might make a good investment, even though they're at a different stage today. So and the people in Neuralink, they want the upside of Neuralink. Same with the people at Boring. So if you mix it all together, it does make it a bit muddier.
And can you imagine the noise that would accompany any deal having to do with Twitter? Now, I personally regard Twitter as a very valuable property, because I have the same. I share, or I have bought into the vision that Elon has for that company. I think he's going to turn that around in a big way, but it is a turnaround.
Yeah,
we're getting away from the fact that it would have to be a true turnaround. So, so now the question is, how do you reward Elon? And I'm opposed to a new earn-out contract when he's still in the midst of this earn-out contract. In other words, he has to commit 5 years of service in order to enjoy these options. So that's something not talked about a lot. But my understanding about these options, I read this thing 2 years ago, but from my memory of what I read the plan 2 years ago. From the memory of what I read is that after he exercises the options, he's required to stay with the company for another 5 years, which, it's a pretty harsh term.
Yeah, that's a long time.
Yeah. So now the question is how to put him into a position without having, and I don't know that the market is even available for him to go to the market to raise, $40 billion or $50 billion. The problem is there's only one class of shares for this company. And you can't change the class of shares because it's a public company.
Right.
So now if you look across his companies, what is the one asset? Well, there's several assets, but we have to find an asset which he could conceivably sell to Tesla for stock and which would be consistent with the mission of Tesla and consistent with the mission of the asset he's selling, and which would not perturb the structure of his holdings. That sale could be done with a new class of shares, I believe. It would need agreement by a very large percentage of the shareholders, I believe, super majority of shareholders. But that class of shares could be designed for him, and it would be a very attractive deal. And the one asset that I think would be a doable deal is a deal to share Starlink between SpaceX and Tesla.
Mm-hmm.
So SpaceX could sell Starlink to Tesla for an issue of stock in Tesla. And SpaceX, controlled by Elon, would also then allow Elon to add 15%, 20% to his existing holding of Tesla, whether it's 15 or 10, it's probably closer to 10%, but sufficient to drive him above the 25%. It's less tidy than life is right now, but whatever deal he does, life is going to become a little bit untidier.
Right.
And SpaceX, Starlink, I would argue, is an asset which not only could, but should be shared between Tesla and SpaceX. SpaceX could retain control of Starlink.
Mm-hmm.
Elon controls SpaceX absolutely, 40%, I believe, or 42%. And so that's way above the 25%. I think that would give SpaceX enough shares that, taken SpaceX shares and Elon shares, he controls over 25%.
Now that sounds does sound messy. It is an idea for sure. It could work. I'm in favor of Tesla getting closer to SpaceX in different ways. And I think this would make sense. Connectivity is very important. Connectivity in the cars, just for entertainment purposes. we don't want the cars to demand or need connectivity when they're self-driving, because
I will tell you this, that it is very frustrating driving across country in your Tesla when you do lose connectivity. Now, I'm not arguing that Starlink has to be in every car, and possibly possibly will get there in another 3 or 4 years when the cost comes down dramatically. But it is an issue in driving, when you do hit those areas where you no longer have connectivity. And it happened to me in Texas. It happened to me several times driving across the country.
You had one other idea, which I thought was interesting, that Tesla loan Elon the money.
Well, yeah, I mean, that's going to be equally messy, but that could be done. I imagine it's going to need a supermajority as well.
Supermajority vote by shareholders.
Mm-hmm. I don't know what the terms would be. I haven't even looked at the law, let alone the company's articles of association. So it's possible that, but it's a very large loan, and it would definitely gear up the balance sheet quite significantly. But the loan could be secured, of course, by the shares, but as long as he was given the vote. So that was, I would somehow prefer the Starlink deal, because if I were in his shoes, I would not want to have a loan of that size on my books, because it leverages him personally, and it would make life a little bit more difficult in terms of his maneuverability, his financial maneuverability.
Yeah.
Which is why I prefer the Starlink deal.
Yeah. Elon is already all in. So for him to be all in and on margin even deeper.
That's not the issue though, Brad.
Okay.
The issue isn't that, he's borrowing money against an asset, because I don't think that would bother him at all. Mm-hmm. What it does do, though, is tie his hands in terms of his own maneuverability financially.
Okay, I got you.
So he can't buy another company. He can't do a deal, because he'll have this large debt, and the bankers will, they'll look at that debt. And while he's in the situation that he's in Twitter, I don't think he wants to, he would want to take on that level of debt, because it's going to be a debt, whatever you want to classify it as on his personal balance sheet, it'll be a debt.
Mm-hmm.
Whereas the Starlink deal, doesn't impact his ownership of SpaceX, doesn't impact his ownership of any of the assets other than Starlink.
Mm-hmm.
It would be accompanied by a Starlink IPO. It doesn't have to be done today either. It could be done in a year's time. It's going to take a year to negotiate the deal anyway. But Starlink is really close to the point that it can be IPO'd. Maybe early next year is their plan. But this is a deal that could be very rewarding for the Tesla shareholders and for SpaceX.
Mm-hmm. And give Elon the votes he wants. Right. Ultimately, I think a lot of Tesla shareholders, they want Elon happy in the role. We don't want to give up too much. We wouldn't be having this conversation without, how hard Elon has pushed Tesla, how he's helped them through the depths of their problems in 2008 and 2018. This wouldn't be happening without Elon. But we don't want to just do whatever for Elon.
Right.
As well.
Now, the other thing is, clearly he can sell a portion of X.AI that he holds to Tesla as well. That also would be, as long as that's done at the same time as he gets the 25% in some sort of package, that would be good for both XAI and for Tesla.
Right.
I wouldn't want Tesla to become involved in building rockets or going to Mars,
or Neuralink,
or Boring Company, but I would want Tesla to have a piece of Starlink. I think that that's consistent with Tesla's business model.
Yeah.
It's consistent with, giving SpaceX the kind of cash flow it's going to need to get to Mars. So I think all of those things work. I'd often thought that SpaceX ultimately wanted to acquire Tesla in order to finance, this Mars thing. But this is kind of a midpoint, a medium, sort of a share of Tesla that will be, maybe 10, 15, 20% of Tesla. And Tesla would have, I don't know, 25% of some reasonable. I haven't done the numbers, of course. I don't know what the Starlink numbers are. But Starlink's a very, very valuable asset right now.
Yep.
It would have to be valued independently, of course.
So we need to bring this to a close. Larry, what are your final thoughts on this for now? I know it's evolving. I'd say like this doesn't need to be resolved today, and this kind of came up out of the blue. Tesla shareholders were getting impatient and starting to talk about the pay package. And Elon does listen to what people are posting on X. So then he responded with this. And what are your thoughts on that? And maybe we can wrap up.
I think it was unfortunate we raised that issue at this point. I don't think there was no reason for it. I can see why people are impatient. I think most people weren't aware of the trial. I was. I try to caution people, but it's not helpful at this point. It's not helpful at all. I mean, I think that Elon has the means to think this thing through and would think this thing through, and is probably talking privately. And I think we should back off. That would be my preference.
We as Tesla shareholders. Well, thank you, Larry. This has been a really good perspective. And Larry is a serial entrepreneur. He's become a mainstay of the Tesla community and has provided a lot of wisdom. It's been a long-term investor in many different businesses over the years and has helped provide us with this insight. We're very thankful for you, Larry. And I'm going to say bye for now.